Cattle prices continue to crush records, but according to one veteran cattle analyst, it's not historically tight cattle numbers pushing those prices higher.
This price increase that we're experiencing in the industry is demand driven. Our per capita supplies were flat last year. They're going to be flat again this year. And yet we've had a market that's gone from $1.75 to $2.25. That's all been demand driven with what we've seen throughout the industry.
CattleFax's Randy Block says the demand piece is historically high.
Beef demand's at a 37-year high. And I think when people think about demand, obviously quality has been the key to that. We've seen the quality of the animals being produced has increased substantially.
As record high cattle prices also push the cost of beef higher, that would typically push consumers to eat more pork and chicken in the past. But it's a trend that Tonser is not largely seeing this time around.
We see some of that, but not nearly as much as you might think. So there's less of that adjustment than historically we would have seen. 100% Glenn opinion is I think habits are a little stickier. Persistence of an item in your meal is a little stickier than in the past. Meat is an ingredient, not just the center of the plate. So there's other ways to alter the ration like you're putting on the plate. Higher beef prices have not elevated pork demand as much as people might have expected. Higher beef prices have not elevated chicken demand as much as people might have expected. And I think it's because the consumer substitution effects, they exist, but they're not as strong as they were 20 years ago.